If you've ever thought about buying a home but felt shut out because of high down payments or strict credit requirements, then you need to hear this. In this video, I'm breaking down FHA loans step by step, so you'll know exactly what they are, how to qualify, and whether they're the right choice for you. No jargon, no fluff, just clear answers to questions you didn't even know you had. So let's talk about what is an FHA loan, the basics. An FHA loan is a mortgage that's backed by the Federal Housing Administration. Now, that doesn't mean that the government is lending you money. It means that the loan is insured by the FHA. Banks and lenders like me still do the lending, but the FHA provides the insurance to the lender in case the borrower defaults on the loan. So why does that even matter? Because it gives lenders the ability and the confidence to approve people who might have not gotten approved before because they didn't have perfect credit or they didn't have a big down payment saved up. FHA loans were created to make home ownership more accessible, especially for first-time buyers or for those who have had a few bumps in the road in their financial history. So if you're sitting there thinking, hey, I don't have great credit, or I don't have 50 grand sitting in the bank to put down on a home, then an FHA loan might be exactly what helps you bridge that gap and finally get into a property. Now let's talk about FHA loan requirements and what it actually takes to qualify for an FHA loan. I'm gonna move over to the whiteboard here. So some of the most important requirements that you know for an FHA loan is, first of all, the down payment. The minimum down payment on FHA is generally going to be a 3.5% down payment, and we can sometimes even get that covered by down payment assistance. So on a $300,000 home, 3.5% down is $10,500. That's much more doable than 20% or more that some other loan programs may qualify or require. The next thing is your credit score. FHA minimum credit score to get 3.5% down is going to be a 580 or higher. Now, if your credit score is between 500 and 579, you can still get an FHA loan. But when your credit's in that range, you're going to be required to put a little bit bigger down payment. So the minimum for 500 to 579 is going to be a 10% down payment. And again, if you're 580 or more, we can go with as little as the 3.5% down. Now, occupancy is the next thing to discuss with FHA loans. Occupancy is what you intend to use the property for. With FHA, the only option is a primary residence. You must state and practice that you're gonna move into the home within 60 days of the closing and that you're gonna live in that property for a minimum of 12 months, 1 year after you buy the home. You cannot use FHA to buy an investment property or a vacation home. But with that said, you can use FHA to buy a duplex, triplex, or fourplex, live in one unit while renting the others out. That's a really popular strategy that people use with FHA to buy multifamily homes. Now, beyond that, lenders do want to see a stable income and employment history. So we're going to need to document a 2-year employment history. That doesn't mean that you need to be with your current employer for 2 years. We just have to be able to tell the story that you've had some sort of work or schooling for 2 years in your life. I've even had clients, we go back to high school jobs and to their college education to fill out the 2-year history. Sometimes you can get approved right out of the gate for an FHA loan, right out of college, or when you're starting a brand new job. It just depends on the specifics of your situation. FHA loans are designed to help more people qualify, but they still want to make sure that you can handle the monthly payment responsibly. Now, the next thing that I want to go over is FHA versus conventional loans. This is where I see a lot of people get tripped up. So how does FHA compare to a conventional mortgage? Here's the short version. Conventional loans are offered by lenders, but they're not insured by the government. They typically require higher credit scores and larger down payments than FHA. There are conventional options that do go as little as 3 to 5% down, but they require 20% or more down if you want to avoid mortgage insurance, which we'll talk about. FHA loans, on the other hand, are much more forgiving. You can qualify with lower credit, down to 500, as we talked about. You can also qualify with smaller down payments and sometimes a higher debt to income ratio. But there is a trade-off for this with FHA. And that trade-off is mortgage insurance premiums, also known as MIP. FHA loans require both an upfront MIP as well as an annual MIP. So the upfront MIP is 1.75% of the loan amount as of right now, and that's added to your loan balance and financed into your mortgage. And the annual MIP is built into your monthly payment. The annual MIP right now for 30-year fixed mortgages with FHA is between 0.5 and 0.55% as we're recording this. Let me give you a quick example. So on a $300,000 home, FHA might only require $10,500 down for 3.5%, whereas a conventional loan with a 5% minimum would need $15,000 down for the same property. So while FHA might cost a little bit more because of that MIP we talked about, it also lets you buy now instead of having to wait to save up more money. FHA can also be much more forgiving when it comes to interest rates. They don't penalize you as much on FHA for having a lower credit score. And generally, you'll find that FHA does have better rates than conventional, especially if you're someone that has a credit score under 700. Now, with FHA, there's a lot of misunderstandings and misconceptions. So now it's time to clear these misconceptions and myths up. The biggest ones that I hear all the time. Myth number one is that you need great credit to get an FHA loan. That's absolutely false. As we've discussed, you can qualify with a score as low as 500. FHA loans were specifically designed for buyers who are rebuilding their financial profile and rebuilding their credit. Myth number two, you can only use an FHA loan once. Not true. You can have multiple loans, multiple FHA loans over your lifetime, but you generally can't have more than one at a time, except for specific exceptions that FHA makes. Myth number three, you can use an FHA loan for investment property. This is also false. FHA must be your primary residence. But remember, multifamily homes, like 2 to 4 unit, are fair game. As long as you live in one of the units for at least 12 months, you can rent the other ones out. Myth number four, sellers hate FHA loans. This one's tricky. Some sellers used to think that FHA loans meant the buyer was weak, but in today's market, educated realtors, they tell their sellers about FHA buyers and how they can close just as smoothly as conventional when you've got a strong pre-approval and a good lending team behind you. One other side note on FHA versus conventional and the myths is that many sellers are hesitant with FHA buyers if the home condition isn't great. So if there's structural repairs or health or safety issues, FHA may not be the best option because they will require that those health or safety issues that are called up by an appraiser are repaired prior to closing. When does FHA make sense? When should you use an FHA loan? Here's when I've seen it's a great fit. If you're a first-time buyer with limited savings, FHA can get you in the game faster. If you're rebuilding your credit after a financial setback, maybe a medical issue or a divorce, FHA can really get you in the game a lot quicker. You'll want to buy sooner rather than later if you use an FHA loan because you're not going to need to wait years to save up. We can actually pair FHA with down payment assistance programs to cover the down payment that you need. FHA loans are amazing stepping stones, and I've helped so many families buy with FHA and then refinance and restructure their mortgage into a conventional loan just 6 to 12 months later, once they've built up a little bit of equity and improved their financial profile and credit standing. That's the beauty of it, is you don't have to stay with FHA forever. You can use it as your launch pad into home ownership, and we can go in and refinance or restructure down the line when it makes sense for you. Here's the bottom line. FHA isn't always the cheapest option, but it can be the smartest one if it helps you secure your first home and start building equity sooner. Because remember, renting while waiting for the perfect moment can end up costing you so much more in the long run. So is FHA right for you? Well, if you're a first-time buyer with limited savings, less than perfect credit, it might be your best path to owning a home, but you need to know the details before jumping in. If you want to see whether you qualify, click the link below or give me a call. I help buyers all over every week, and I'd love to help you too. If you want to keep learning, check out my video right here where I explain DSCR loans. That way you'll know exactly which one fits your situation best.